Oakleigh has a 18.6 strategic investment plan. I guess we're just going to outline what we're expecting to see currently and over the next few years as we head into and through the second half expansion into the winner's curse phase and then after that the bust phase of the cycle. Currently, sort of years 23, 24, we're expecting to see fast appreciation in shares and real estate assets. What we think that means for investors is continually build your share portfolios and manage your emotion during those fast appreciation and also volatility. We don't think it's going to be going up in a straight line. The market never does. Commercial and residential property should continue to yield higher returns. I think in the instance of commercial, there will be pockets that continue to struggle, in particular some of the office space globally. And there's no doubt that will continue to struggle even in Australia. So you need to be a little bit selective with your strategy, but I think broadly you're going to continue to see land markets and property prices tick higher. And what you just want to start thinking about is what your exit strategies are and what do they look like. Importantly, how do you minimise tax on any capital gains that you will make from any appreciation in asset prices over the next few years. After the next couple of years, we start to head into what we'd call the winner's curse phase, which we think are looking like is going to be 25, 26. We think you continue to build on your share portfolios, managing your emotions, start preparing and actioning your exits in real estate based on your tax minimisation and financial goals. In that respect, you should obviously speak to your financial advisor and tax accountant, but importantly, you need to have the conversations before you do any selling to make sure that you're not paying tax where you could have otherwise avoided it. We think you should consider what you're doing with fixed versus variable interest rates. Towards the back end of the cycle, you do tend to see rates continually push up. That may or may not put pressure on you, so maybe take that into consideration. And start just reducing overall your leverage. And that's in respect of property, but holistically from a household asset perspective. And just continually build up those cash reserves. Expect more volatility as we get into the end of cycle. There's going to be exuberance. There's going to be hubris, particularly from authority figures. This is the winner's curse phase. This is what we're going to see. We're going to see fast markets, lots of emotion, greed and action and all those sort of things. So don't get caught up in it. Go back to the action plan if you have to, take a stock take and just start to reassess and pull back as everyone else is kind of jumping in, so to speak, towards the end of cycle.